Welcome back to another episode of my trading vlog, where 80% of my views come from returning subscribers. If that's you, hit like. If you're not subscribed, consider why most of my views are returning subscribers. This form of analysis is very accurate. Moving on, yesterday I said we might get a little more upside in AMC. The day before that, I said we have a bigger bounce coming, and that was going to come up to that $5 level, even maybe a little higher to $5.65. We are pushing towards there, and I want to say that if we do get a corrective zigzag, another corrective zigzag, that the extension takes us right to that level, right where the price broke down from the corrective uptrend that we saw break earlier this week, or last week, back here at 565. You can see that 100% extension at that same level. So it is possible that, yeah, we get one more little push up, and then really I think that's going to be it. There is a bearish divergence already forming, so whether or not we get that high has yet to be seen. At this point, I'm kind of doubting we do. I really think we're just going to turn around and head south at this point. So maybe today I get it wrong, but I really think we're going south. GameStop fighting 21.89 yet again as the price pushed above that level in weeks past. We formed a quadruple bearish divergence on the hourly time frame. The price did break down, and now we're in a corrective bounce for what I'm calling minute wave B, and it's very possible that this move is finished. Soon we should see a spill down to minute wave C. Per this analysis, if this count is correct, then that's what I expect to see. The RSI is, wow, just going from extremely overbought, and it's just failing to fall, really. So it's more upside too here. Man, I want to say we're topping. But I'm going to need to see a push below 21.14 or a push above 22.35. This range in here is kind of tight. Again, I want to say we're going down, but there may be yet one more little push up. Now, into the new analysis, I'm going to start with Tesla. I hadn't really spent that much time on these charts before. I did see a bigger zigzag through here, and I believe we are working on wave X in a WXY kind of double, triple zigzag fashion. I can't remember if it's a double or a triple. At any rate, it looks like 207.95 is a massive area of resistance, and the RSI is setting up a chart pattern here. When the RSI sets up a chart pattern, it's important to pay attention. This looks kind of like a head and shoulders, doesn't it? Otherwise, we could probably draw something else, maybe like a triangle of some sort. It's hard. The RSI is an average of the price movement, and there's 3 different averages used to calculate that. So yes, you can use chart patterns in the RSI. It's just a little different. It's not quite the same as a price pattern, but nonetheless, I think we're topping here. And the reason why I say we're topping here is because if this were to become a motive wave, this would be a great spot to find wave 1 towards 207, and then wave 4 retracing up to that level. So that's what I'm thinking there. Hopping into the hourly time frame, I have some more analysis, more specifically about the recent uptrend. This was kind of hard to analyze because it was just an extension upon an extension, and it is all corrective. It's not necessarily motive yet. The subwaves are motive, but the overall move itself, I believe, is still corrective. We're trying to retrace that big push down from the all-time highs. So I called it minute waves A, B. I just started subdividing into a motive wave, which typically composes C. So we have minuet 1, 2, and then I just started extending minuet 3. So I have sub-minuets 1, 2, 3, 4, and then 5 has a, I believe it might not quite be an ending diagonal triangle because the 4th and 1st wave of this triangle don't overlap. So I just called it, I don't know, a rising wedge. It's not really a rising wedge, more like a pennant, but 5 appear at 215, spill down for 4, and this push higher, failing to set a significant new high from minuet wave 3, gives us minuet wave 5. It's not truncated, but it's not strong. No, it's not. And now we complete minute wave C and also minor wave A. I really think this is a great spot to see a top, and while we're bouncing around up here, we're probably going to be drawing a chart pattern. It may be something like this. I don't know yet. We will see what happens when we get to this uptrend. I believe when we do break down, I mean, really, I should say if it breaks down, the price target's going to be very low. It's going to be seriously down to like 125, probably 143. This could be a really big spill, and it could be sustained for quite a while. Tesla bulls are going nuts, and I'm sitting here shaking my head. I also did some analysis on Apple, which is another stock I have done some analysis on, and so here's what that looks like on the daily time frame. It's really hard to tell. I think here specifically, I wanted to emphasize that this is probably going to be a flat correction. Apple might go up and down less than other stocks go down that are in the S&P 500. I think Apple will outperform SPY overall, so that's why I'm kind of expecting a flat correction here. And it looks like it might be already done with its zigzags. At this point, I think to extend this wave C, we're going to need to form a triangle. Looking for more grindy sideways action between 126 and 153 over the longer term. Zooming into the hourly time frame and looking at the smaller time frame chart, you're going to see I do have an uptrend through here. It's very similar to Tesla, and there was a little overlap between one of my counts here between waves 1 and 4. This was after hours during earnings, and the price exploded. So part of me wants to say, hey, this is probably okay because of those options contracts. Elliott wave analysis was derived from cash markets. Derivatives seem to be a little different. Frost and Pressure go over that in their book. There is a significant level of resistance at 155, which I think is going to form a double top. And if I zoom in a little more, you're going to see that there is actually an ending diagonal triangle occurring in wave 5 of this minuet wave. There is overlap between waves 1 and 4. Here, when we see it in this sort of a triangle, we expect it to be a dramatic reversal. And we did have that dramatic reversal right towards the close today. And again, I drew another triangle like this just on the minute chart. In the Discord, I was asked, do you think there's more room to head up? And I said, no, I doubt that. And sure enough, we have this big spill down, failing to close above that bullish extension confirmation, just overthrowing the top of the diagonal triangle and heading lower. So I am looking for downward action in Apple for now, and that's going to go alongside Tesla. Moving into NVIDIA. Well, before I move into NVIDIA, I actually want to zoom out on this time frame and just show you what I did with these zigzags. So I don't always use the annotations from the Elliott wave degrees to keep track of where a wave is. I use colors. I use yellow, blue, white. 3 or 5 yellows builds a blue, and then 3 or 5 blues builds a white. Does that make sense? And so you can kind of follow these colors and see how the zigzag is compounding and fractaling and growing. And if you do that, you're going to see that, yeah, it kind of looks like we bottomed, but at the same time, the markets I don't think are ready to move up yet. The answer to that conundrum is sideways. Sideways, sideways, sideways. The most annoying chart pattern ever, a triangle. I think we're going to get a massive triangle in the tech sector. It's going to be so annoying. So annoying. Okay, NVIDIA. I didn't spend a whole lot of time on NVIDIA. I did find a really clean chart pattern here. This zigzag action looks more motive heading down, which I really like. I was able to say 1, 2, 3, 4, 5, and A, B, and C. Clean. I'm going to follow this chart a lot because this is easy compared to, SPY, which is in this endless correction cycle, right? This looks like a motive down and a corrective up, and we're going to be looking for another motive down if bullish reversal is not actualized. We could see a little push higher, I think. This is a head and shoulder target I put together, and actually I should be doing it right here. So what I did is I took the height from the highest shoulder down to the top of the head, and then the height to the neckline, and I projected that with a negative 100%, but it's the same, to 257. So 257 seems like a good spot for the price to reach based on the inverted head and shoulder bottom pattern here. But again, there's going to be a lot of resistance here in that 215 to 230 level. And I'm watching it again because it's possible that this is actually wave 4 and wave 5 will head lower. I don't know, but I do believe we're going to get a rejection here in the markets in general, actually. NVIDIA, though, could still push higher. I know, it's really tough to say. It's really tough to say. Had I been following this when we broke this downtrend and we had this bullish breakout from the head and shoulders, yeah, I would have called this rally. Absolutely would have called that. The bearish reversal level is at 179, where you're going to see peak A. If we do pass this to the downside, then wave A cannot be a first wave in a motive wave. Therefore, bearish reversal, because the price would still be in correction. I do see the potential for a triangle here. The triangles, they're going to be everywhere. Let's go to SPY. We did have an important move right towards the close below that 410.55 level I've been scrutinizing for a long time. I'm going to go ahead and turn on the price here because I want to see it. 410.55. Yes, I am now calling the most recent high point C and another zigzag. So we have ABC, ABC. It's a double 3, and it seems like a good time to start the next motive wave, doesn't it? The RSI there plunging into oversold, and now we have a new low. The RSI has not yet reached into oversold, so it's possible that we get a bullish divergence of the RSI and a push higher up to 418, which is something I would be expecting, but would not be surprised if it never actualizes. From this point forward, I am pretty bearish. Pretty bearish. This move today made me feel pretty bearish. Oh yeah. Going into the future, I don't think that the markets are going to have a good time trying to rally against the dollar strength, which continues to push higher. Today, we've actually had that push close above that 103.8 level, which I was saying would confirm our ABC zigzag heading higher up towards about 105 or 107. This really could hurt equities. I'm not sure why that relationship exists, but it does. Immediately, you're going to say, Cap, why aren't you pointing to bearish divergence right here between these peaks? Look, the price or the level is higher in the dollar index than it is on the RSI. And that's true. It's important to keep that in mind. Remember, divergences do break. And when divergences break, that's to say, per se, the dollar were to rally through that level, the dollar would be making a big advance through there, a huge advance through there, as the RSI breaks that divergence and oscillates above overbought. So, I mean, this is what I'm looking at. Everything that the Federal Reserve has said has indicated that they would be continuing to raise rates if inflation persisted, if the economy was still running hot, and it is. So I think that's that. Going to SLV. I haven't looked at this today. Yes, looks like we're continuing down. I was expecting that. Going into GLD, again, I want to say, though, that we might actually be forming some sort of wedge through here now, so keep track of that. That's important because there may be a time when the correlation between the dollar and the precious metals flips, and that's going to be a big deal. That's going to be a huge deal. If that does occur, wow, it's going to be amazing. I think that's all I want to do today. Minus, VIX. Going to do VIX too. See, VIX is starting to bounce. It looks like I was anticipating this. We do have a big zigzag forming. It's set up. This set up. The stock market crash of 2023 is locked, loaded, and ready to go. Stay tuned for more red candles and misery in the weeks ahead. The bulls are going to get burned.